One of the most important skills you need to as a trader is the ability to read the market structure. In fact, it is a critical skill that will allow you to use the proper price action strategy in the right market condition. This is one thing that you need to understand as a trader, the market structure. And guess what? That's what we'll be talking about today. We'll be talking about the market structure. All right? Yeah, so join me today as we come in. And in case you're just joining us for the first time, my name is Andrew Da Silva Williams. Please don't go nowhere. Just stay down, grab your popcorn, grab your juice, and as we go into the class today, we'll be talking about the market structure. All right? Okay, so yeah, with that being said, we got a whiteboard today for those of you just joining us for the first time. Yeah, whenever you see a whiteboard, just know um, it's getting serious. It's getting serious, bro. Yeah, so we'll be talking about the market structure. I just want you guys to understand this is one of the most crucial parts and the most critical parts of the market that you need to identify. You need to identify and to know the market structure. So we're coming in now, we're going to be saying for the first time, what is market structure? All right? Market structure is the way the price moves to know whether the price is going up, is going down, or is moving sideways. If the price is moving in sideways, it's only for professional traders. If the trade is moving up, it comprises of the higher highs and the higher lows. If the price is moving down, it comprises of the lower lows and the lower highs. All right, so I'll be taking you for the first one, which is uptrend. The uptrend market. These are the components of market structure. We've got the uptrend market. Number two, we've got the downtrend market. Yeah, I hope you guys can see this clearly though. Number two, we've got the ranging market. The ranging market. Yeah, and the fourth one is the choppy market. The fourth one is the choppy market. The choppy market is not really there, but it's not advisable to trade the choppy market. But I'm just going to bring it there for you guys to understand, because once I'm listing things like this, I'll definitely want to make sure you guys understand everything, understand every aspect. For the guy that texted me on my Instagram to tell me to talk about the market structure, yeah, this is it. In fact, I know you watching me down there. I know you up there, you watching, and I just want to tell you, these are the components of a market structure. As long as you can identify the market structure, you can identify the uptrend, you can identify the downtrend, the ranging market, a choppy market, you're good to go. Once you open your charts, the first thing you're supposed to identify is what and how to identify these. If you can identify these three things, once you open the chart, just know you solved half of the problem in the chart. All right. In the uptrend consists of knowing the buyers are in control. When you come in and you see an uptrend, just know the buyers are in control. And once you see a downtrend, you know the sellers are definitely in control of the market. All right. And this uptrend consists of higher highs and higher lows. Higher highs and higher lows. In fact, that's what I'm going to be showing you up today. An uptrend. Let's say this is your chart, right? And you see higher high, higher low, higher high, higher low, higher high, higher low, higher high. If you come into a chart and you see, this is not one of the best charts, but just bear with me, okay? All right. So if you come into your chart and you see the market like this, just know this is a higher high and this is a higher low. This is a higher high and this is a higher low. This is a higher high and this is a higher low. This is also a higher high. If you can identify this in the market, you already know the direction of the market. You already know the buyers the buyers are in control. And when you see an uptrend in the market, always know the trend is your friend. In fact, that's the old one of the saying in the market, and especially for traders. Traders always say the trend is your friend, your best friend for that matter. So whenever you be seeing an uptrend in this way, just know this is an uptrend market. The buyers are in control, and what you'll be doing at this point, you'll be looking for how to place a buy. All right, and that's what I'll be showing you into this video today. If you're still joining us, just chill back, don't go nowhere. Hope you grab your popcorn and you grab your juice, so pay attention to this. All right, so we got the three types of I've got the three types of market structure. I already told you guys the uptrend, which is the one you can see right now. I'm moving on to the downtrend now. All right, and let me drop this and pick up the red marker. Yeah, stay with me, stay with me, stay with me. All right, yeah, so this is my whiteboard, right? And I'll be showing you the downtrend. I'll be taking this like this. Let's say this is the chart, right? For instance, this is the chart, and we'll be going to a downtrend. And the downtrend consists of, the uptrend consists of the higher highs and the higher lows, but the downtrend now consists of the lower highs and the lower low, a lower high and a lower low, a lower high and a lower low, a lower high and a lower low. I want you to just go flow with me with this market. I know this is not the best trends and this is not the best drawing, but one of these days I'll take you guys to my chart and I'll make you understand how to identify the market structure properly with an example. Either I take one of the pairs and show you guys properly, all right? But for now, just watch me, stay with me. This is going to be the lower high and this is going to be the lower low. This is going to be the lower high. This is going to be the lower low. This is going to be the lower high. This is going to be the lower low. This is going to be the lower high. And this is right here, a lower low. So in a market like this, once you see this is a downtrend, a downtrend market. All right? Yeah. So this is a downtrend market. Whenever you see this, just know the sellers are in control. Let me write this with the red pen. You just know the sellers are in control. Whenever you see this, know the sellers are in control. All right? This is a downtrend. For instance, you see when the downtrend is like this, when you open your chart and you check out the market structure and you see a downtrend going, which comprises of the lower highs and the lower low, you definitely know that the sellers are in control. In this particular market, what you'll be looking for definitely is how to sell this market, and that's what I will be showing you guys today: how to sell when it's a downtrend, how to sell when it's an uptrend, and how to identify when the market is ranging. I'll definitely show you guys how to identify a choppy market also, and that's the market you have to stay away from. All right, so stay with me. All right, always remember the trend is your friend. Even if it's a downtrend, even if it's an uptrend, always identify and remember the trend is your friend. Please, you have to, this is very, very, very essential. You need to keep that in mind whenever you're trading this type of market. All right, make sure you know and you understand that the trend is your friend. As long as you can understand this, I'll tell you, you've solved 50 to 60 to 70% of the problem in the market, because this market is really hard. It's really hard. We don't need to make it more complicated. Imagine you trying to buy in this type of market. What will you say? That's how you blow your account. And I would definitely don't want you to blow your account, especially when you're watching my videos, especially when you're in my team, you're in my game. I'll definitely want you to save that account, and I'll make you want to identify the market structures. As long as you can identify these market structures, you're good to go. Trust me. All right? So this is a downtrend. I hope you guys understand this being a downtrend. I'll be taking this guys now to the third one. The third one now, which is Just give me 2 seconds. Let me wipe this off this board. And I'll be taking you guys to the third one, which is a ranging market. Stay with me, stay with me. It's going to be an interesting topic today. And this is one of the topics that you need to understand. Once you understand this, trust me, you're good to go. You can buy and you can sell, right? Because I know that's what you guys are waiting for. Everyone wants to make money from this chart. Everybody wants to make money from this trade. But what is making money from the trade if you cannot understand the market structure? It's just like you. For instance, now, it's just like you're going to build a house and you don't have no foundation. How is that possible? It's definitely not possible. So nobody wants to go and build a house and definitely don't have no foundation. You definitely want to have a foundation, and the foundation of your house has to be, when it comes to the market, it has to be the market structure. You need to understand the structure of your house. You need to understand if just come to look at it, you need to understand everything about this market structure, and that's what I'm breaking down for you guys today. All right, stay with me. So we'll be talking about the ranging. Let me use this for the ranging market. I hope you guys can see this. All right, so the ranging market is like this. Okay, straight down the ranging market. Remember, I told you guys, we talked about the uptrend. The uptrend is the buyers are in control, which is going upwards, and we talked about the downtrend, which is going down. Right now we're talking about the ranging. Remember, we said the ranging is a market that is just moving sideways. All right, pay attention to that. Okay, so the ranging is like this. When the market is moving this way, moving this way, this is a ranging market. When the market is moving this way, I'll tell you the truth about this, right? The only way for you to trade this is if you're a professional trader. A professional trader already know how to trade a ranging market. So when you see a ranging market, it always consists of, this is the resistance point, right? You see, as long as you can see 3 resistance level, a lot of people call it supply and demand actually, but I'll call it resistance and support. All right, I'll call it resistance and support for today. So once you see a ranging market giving you 3 tops, which is the 3 resistance part, and it's giving you the 3 top 3 bottom, which is the 3 support parts, you already know this is a ranging market. And you have to be a professional to understand this market, and you have to be a professional to trade this market, because I won't want you to jump into a market like this and start to go and try to trade it. That is how you blow your account. That is how you blow that account. You watch me every day. I give you the rules. I give you everything just for you to avoid blowing your account. So if you trade the ranging market without you having experience, or without you being a professional, without you knowing what you're doing, you're definitely going to blow that account, which I don't want you guys or anyone to do. All right. So now, so we'll still be talking about the ranging. So we're done with ranging now. I'll be moving to the choppy market. Okay. So yeah, this is the ranging all done. I hope you guys understand that part of a ranging market. Okay. So yeah, so stay with me. I'll be showing you guys this aspect of a choppy market. All right, a choppy market. So that's the last one right here. The choppy market has no clear direction. In fact, no clear direction in a chart like this. Let's say we're having a chart like this. It's similar to something like the ranging market, but in this way, a choppy market moves this way. It doesn't have no support, it doesn't have no resistance, it just moves this way. And once you see the market moving this way, stay away from that market, please. That is not the time to trade. That is not the time. That is the time to go out and do something else. Like I already told you guys, there are times for you to trade and there are times for you to watch the market. When the market is showing a choppy market sign, that is the exact time for you to watch. And once you're watching, you're still winning. once you're watching, you are still winning, because that is when you prepare for the market. That is when you understand how to know when the market is going to trend and the market is going to stay and chill for a while. When the market is choppy, stay away. That is when it's chilling. It doesn't have no decision at this point. This is not a path for you to trade. So just stay and chill. Don't go in. Please. Don't go in when the market is in a choppy mode. All right? Very, very important. This is where a lot of traders lose their money, because they don't know where the market is going at this point. So at this way, you definitely stay away from a choppy market. That is why I don't want to include it, but I definitely have to, because I need to talk about it for you guys to know, because a lot of you guys don't really know much about this. A lot of you guys don't really know much about this, especially the guy that told me to come on here and explain to him better. I will advise you to take notes. All right, I know you're watching me wherever you are. You say you're from is it Slovakia or so? Yeah, you say you're from Slovakia. Yeah, Slovakia. I just hope you're watching me right now and you're paying attention to what I'm saying, because I don't want you to blow your account. I want you to pay attention. I want you to understand the market. I want you to extract a lot of profit from this market. So as long as you can understand the structure of the market and the market structure, you're definitely going to understand. And now I'll be showing you guys how to trade them, how to trade this particular market. When you see an uptrend market, how are you going to trade it? When you see a downtrend market, how are you going to trade it? When you see a ranging market, how are you going to trade it? That's what I will be showing you guys. Remember, I told you guys to stay away from a choppy market, because we're not going to be trading a choppy market. No, not in this class today. All right. So I'll be showing you guys how to trade a uptrend market for the first time. So yeah, so give me a few seconds. Let me grab this. Yeah, so we'll be going to an uptrend. We'll be showing an uptrend market. An uptrend market. So an uptrend market, you already know when the market is moving upwards, you know the buyers are in control, right? So let me take you to the chart now. Let me draw a chart for you like this. Yeah, so we're having higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. So for instance, we're having, I told you guys the market of an uptrend comprises of the higher highs and the higher lows. So you already know we're going to write the higher high right here, we'll write the higher low right here. The higher high should be up here, the higher low should be up here, higher high should be up here, the higher low should be down here, and so on and so forth. Higher low. So when you see a market like this, you already know it's an uptrend. And we said the trend is your friend. So in a form like this, you already see how to understand this market like this. When the market is like this, you already try to understand the market structure. How are you going to understand the market structure is by you trying to mark out the supply and the demand part, which is mark out the support and the resistance part in this market. So what are we going to be doing? We'll be marking out the support and the resistance part. So we start from the top, which is the higher high. It touches it. Yeah, we start right there. This is not one of the best lines, and this is not one of the best charts, but just bear with me. As long as you can understand what I'm saying right here, then we're good. All right, just pay attention to what I'm saying, not really the charts, okay? Because my chart is not one of the best, but I'll tell you one of these days I'll take you into my chart. I'll show you, I'll give you an example, and I'll show you what you're supposed to do. Definitely I'll take a pair, I'll show you an uptrend in that pair, and I'll show you how to trade them more better. I'll show you a ranging market also, and how to trade them also. And remember, we don't trade the choppy market, all right? So yeah, so we're still in an uptrend. So yeah, and this is an uptrend, like I said, always remember the trend is your friend. When you see an uptrend this way, so let's take this out of the way. So when you see an uptrend this way, what is supposed to be on your mind? we are going to buy. So how to trade this type of market is what is going to be on everyone's mind right now. That's what I will show you guys, how to trade an uptrend, because right now we'll be talking about the retracement move and the impulsive move, right? Which is the swing point. The swing point is always the retracement point. So the retracement move. So we'll be talking about. Let me come out a little bit. So this is the retracement. This is the retracement, and this move up here. Okay, let's say this is the retracement. This is the retracement, and this is the beginning of the impulsive move, right? So this move right here is the impulsive move. I hope you can see this clearly. It's an impulsive move. That's what I call it, an impulsive move. Let me write it clear a little bit so you guys can see it properly. Impulsive move. All right, so in a market like this, right, what you'll be doing if you want to trade an uptrend in this form, what you'll be doing is, once the market comes from the retracement point, remember this is the higher high, this is the higher low, right? When the market comes from here, which is the retracement, it's trying to retrace back. It already moves from a higher high to a higher low, and it moves from to another higher high, which is, it broke this resistance point right here. You can see it. It broke this resistance point and created a new resistance point up here. So what are we going to do? Nobody wants to buy from here. You have to do what? You wait for it to retrace. That is why this is the retracement point. So you wait for the market to retrace, come down and create a new support right there. In most cases, what is all about this market is it moves from upstairs to downstairs, from upstairs to downstairs. If you could notice it, from upstairs to downstairs, from upstairs. I'm just putting it in a layman way for you to understand what I'm saying, all right? So when the market moves from resistance to support, it creates new resistance. That's moving from a upstairs to downstairs and downstairs. That's what I'm just trying to explain for you guys. So when you see the market is trying to retrace, if what you do at this point, you wait for it to retrace, you don't buy here. You wait for it to retrace. Once it retraces and it's trying to go up, it's trying to make this impulsive move. So going up back is the impulsive move. All right. So what you will do is you place your buy from here. All right. This is where you place your buy. That's one of the best ways to trade this market. That's one of the best ways to trade an uptrend market. That is where you place your buy. And once you place your buy from this zone, definitely you put your stop loss just below your previous support right here. Because this turns to be the support, definitely. You see, I told you guys the support, that's what we'll be doing. And this point, this stop point is going to be resistance. All right. So you understand, this is the support. This is okay. Let me put this way. This is the support. This is the support. This is the resistance. This is the support. This is the resistance. Remember, I showed you already upstairs, downstairs, upstairs, downstairs, upstairs, downstairs, upstairs, downstairs. Before it makes you a new upstairs, it comes to the previous downstairs and create a new upstairs. All right. So that's why we put it the support level and the resistance level up here. So as long as you can understand this, you can understand the market makes an impulsive move up here, immediately it retraces down to the support. Once it hits this market structure way, which we've drawn out this support and resistance line, definitely is going to buy from here. So what you do is you place your buy right here and you put down your stop loss here. This is how you get this impulsive move up to this upside, all right? And that's how you make money out from the market when you place in a buy trend. All right, you can understand me, right? Because I want you guys to understand how to place the buy trend whenever you're coming into the market for the first time. And that's the best way, because there's definitely going to be ways for you to lose your money, especially when you're trying to buy from this zone. Imagine you coming into the market and trying to buy from the retracement zone. How can you buy from the retracement, from the top of the retracement zone, without it going down? If you buy from this zone and the market retrace down, because definitely if you buy from this zone, you definitely put your stop loss right here. And if once you buy from this zone, the market is going to retrace down and kick you out. That's why a lot of you guys will be complaining that immediately the market kicks you out, it started going upwards. And once the market kicks you out, it started going up. So before you guys, oh no, before you know it, they'll be complaining that the market kicks me out and still be going to my right direction. Yeah, it's because you guys bought from the beginning of the retracement zone, and you expect the market to not take you out. That's impossible. It's definitely going to take you out. Definitely 100%. So you need to understand how to identify an uptrend and how to identify the retracement zone and the impulsive move. In fact, in a trade like this, what you do first is you draw your trend line. This is not one of the best trend line, but once you draw your trend line, it already shows you the market is going upwards, which is an uptrend. That is how you identify the market structure. That is how you identify a market structure, and this is the right way to buy. To buy in an uptrend. Okay? As long as you're placing your market like this and you're buying from this zone, you are definitely guaranteed going to make money from the market. That's how you extract money from the market, all right? Take note, this is the best way to trade an uptrend, okay? I hope you can see it. I hope you understand it, because I'll be switching down to the downtrend, how we could trade and how we can trade a downtrend, all right? So take note of this, and I'm going to wipe it off right now from the whiteboard. So yeah, I need to take it easy on you guys and make sure you guys understand this part, because if I don't come out here and show you guys, this is gonna be really, really bad for me, because it's just like me taking you to just like me showing you guys how to, it's just like me fishing without showing you guys how to fish, yeah. So we'll be moving on to the downtrend, right? Yeah, the downtrend market is what we'll be talking about right now. Yeah. Sorry. Yeah, we'll be talking about the downtrend market. Yeah. Sorry, downtrend market. You see the downtrend market, right? When we say the downtrend, whenever we say the downtrend is when the market is going down. And when we say the market is going down, it means the seller is in control. The sellers are in control of that market at that particular period of time. So when you see a market going down, you remember always one thing. What did I always say? I always tell you guys, remember the trend is your friend. Your best friend for that matter. Whenever you see the market trending, the trend is your friend, all right? Keep that in your mind, because when we go into we're about to go into the chart now. Whenever you see a market in a downtrend, always know the sellers are in control, all right? So we'll be moving out from a lower high to a lower low, a lower high to a lower low, a lower high, a lower low, a lower high to a lower low, a lower high to a lower low. So I'll be signifying a lower high right here and a lower low right here. A lower high right here and a lower low right here. Lower high and a lower low. A lower high also and a lower low. Let's see a lower high up here. So in a market like this is a bearish structure, right? In a bearish structure, you definitely want to sell. You just imagine you going to seeing the market structure in this way, showing you a bearish structure, and you'll be thinking about trying to buy. In fact, you can't buy this market right now because the market is definitely going down. And once you buy a market trending downwards, you're blowing that account, you're losing your money. So it's not even advisable for you to trend to place opposite direction of what the market is doing at a particular period of time. So in this way, what you're definitely going to look for is you look for how to draw your market structure, how to draw your lines in the market structure, how to identify the supply and demand zone, like I already told you guys. And when you're trying to identify the supply and demand zone, you move in this way, right? You move here, you touch it downwards. This is not one of the best, but please bear with me, okay? Yeah, you move it like this. Yeah, perfect. Yeah, it's perfect for us. Let me just move this up a little bit. It's perfect for us here. So in a trend like this, we know the sellers, we see the sellers are in control. Once the sellers are in control, you definitely want to be looking for how to sell this market. And once you come in online and you come in and you see the market structure, identify it through the higher time frame, and you see like the market is going down, you go into your daily time frame, also you see the market is going down, you definitely want to be looking for what the retracement. And once you go into your 4 hours time frame, that's when you're going to see and know where the market is retracing. Definitely you're going to a 4 hours to a 1 hour time frame, you're definitely going to see where the market is retracing from. I already showed you guys this is the beginning of the retracement, right? So in a lower high like this is going to be the beginning of a retracement in a downtrend, and this is definitely going to be the impulsive move. The impulsive move. The impulsive move is directly opposite to the uptrend. Directly opposite to the uptrend. So that's what I will be showing you guys today right now. Let me wipe this up so it will look cool for you guys. So this is the lower high. Yeah, so this is the beginning of the retracement, and this is the impulsive move. Whenever you see a move like this is the impulsive move to the downside. All right, and in cases like this, you see I showed you guys this is going to be the resistance, and this is going to be the support. I told you the upstairs is called the resistance and the downstairs is called the support. I'm just telling you this way for you guys to understand and you guys to pay attention to what I'm saying. If the upstairs is the resistance, the downstairs is going to be the support. So the upstairs right here is going to be the resistance, and it's still going. Yeah, definitely the down ones are definitely the support, and this is the resistance, and this is this is the support. So this is how it goes. So definitely if you're selling this market right now, what are you definitely going to be doing? You're going to be placing the sell trade from this top. Once you sell from the beginning of the retracement, you're going to get all of these to the downside. So whenever the market is moving from a lower high to a lower low, it's coming downstairs. So you see a lower high to a lower low downstairs. It created a lower high to another lower low downstairs. So the market is coming down, and when the market is coming down, definitely you trade from the beginning of the retracement. Once you trade from the beginning of the retracement, it bounces here. Then you sell from here. Once you sell from here, you'll be getting the whole of this profit to the downside. That is definitely going to be a huge profit. You definitely don't, once the market comes to this zone, you take out your profit. That's how you get and you extract money from the market. I hope I'm definitely showing you guys how to go about this, because once you can understand this in this market, trust me, you're winning. Once you can identify the market structure in the market and how to trade them, you're definitely winning. Just imagine you coming into the market and try to sell from here. How will you sell from here? If you try to sell from here at this point and the market try to retrace up back to the lower high, definitely your stop loss is around this zone. This is how the market will kick you out of the stop loss. And a lot of you will say, oh yeah, the market kicked me out and started going back my way. Why won't the market kick you out from here and start going back your way when you don't know and you don't understand the market structure? You get me, right? You see what I'm saying? The market is definitely going to kick you right here if you start selling from here. It's definitely going to kick you right here because you don't understand the market structure, and it will start going your way definitely because you don't understand the market structure. That is why the market structure is very, very, very critical and essential in this at this period of time, especially when you're a trader. If you're a beginner's trader, you're an intermediate trader, if you're a professional trader, in fact, this is how to trade a downtrend. As long as you can identify these, trust me, you're winning. You're winning, you're winning, you're winning. I don't want to say too much on this. I hope you guys understand the downtrend market. I'll be wiping it out, I'll be taking it out from this board, but I know this is not the best charts you could get. But as long as you understand what I'm saying, that's good. 100%. I understand that. All right. Yeah. So I'll be wiping this off now, and I'll be taking. I don't want to take too much of your time. I just want to elaborate all these for you and show you how to trade them, because these are really, really, really crucial in the market. You'll be getting a lot of these, especially once you can identify it. I already told you guys the way, and the best way for you to identify this market is when you come in, you use the higher time frame to identify it. You come down to a lower time frame before you could buy and you can sell. Either you're using the uptrend or you're using the downtrend. So we'll be talking about the ranging market now. Remember I told you guys the ranging market, you can only trade the ranging market if you're a professional. Imagine you not being a professional now and you want to trade the ranging market. And this is how the ranging market is. I already told you, if you're having a ranging market, the ranging market comprises of two support level. Market is showing two support level, at least two support level and two resistance level. So you could see a resistance. Yeah, this is the resistance. I told you the upstairs is the resistance and the downstairs is the support. But a lot of people call it supply and demand, but that's what I'll be taking for you guys today. And this is the downstairs. So the downstairs is the support and the upstairs is the resistance. Yes, you see, the downstairs is the support, the upstairs is the resistance. This is in a ranging market. This is in a ranging market. So once you're trading in a ranging market, you already know the downstairs is a support and the upstairs is a resistance. As a professional trader, if you're eager to trade at this point, because a lot of you still wants to get money from the market, even if the market is showing you, yeah, I'm trading, I'm ranging, I'm doing whatever, I'm consolidating. You people still want to get money from the market. That's all right. That's no problem. But as long as you've been trading this market, as long as you're not a newbie, definitely you want to start. If it's a sell, if you're trying to look for a sell at this point, definitely you start selling from here, because definitely this is going to be the retracement and this is going to be the impulsive move. So remember, you start selling from the beginning of the retrace. You start selling. If you're trying to sell, you start selling from the beginning of an impulsive move. How to identify an impulsive move? That is why I'll be definitely showing you on my chart, because you use the lower time frame. Once you see the chart is ranging on the higher time frame, you use the lower time frame to identify it. Then you start selling from this zone. Once you start selling from this zone, you take the whole of this impulsive move down here and you benefit from this, because this is going down through here, and if you're buying, you're definitely going to be buying from here just before the impulsive move to the upside, and definitely you'll be going to get all this from the market, which is the impulsive move to the upside. So that's one of the best ways to trade a ranging market, but I won't be advising you to trade it if you're not a professional. If you're not a professional. Take note of that. This is going to be only for professionals and people that have been trading the market for a while, because they already understand how to go about it. Because I know most of you guys that are coming into the market, most of you guys are newbies, most of you guys are intermediate, most of you guys have been trading the market for a while, and you're still coming to watch and to understand more about this. But I'll tell you, this is the best ways, all right? This is the best ways to trade it. I'm never going to tell you like, I definitely don't want to blow your account. You know me, I don't want you to blow your account. So I want to tell you truth in whatever I'm saying, because whatever I'm saying is going to come back to me. Because imagine you blowing your account. What's my gain? I don't have anything to gain if you blow your account. I don't have nothing to gain. So what I'm saying is the best way for you to understand this is for you not to blow your account. And as long as you don't blow your account, I'm always good. I am what? I am always good. If you can identify a trending market, if you can identify a trending market, either it's going to the upside or a downside, just know that you've already solved 90% of your problems, especially when it comes to the market structure. Hope you understand this ranging market aspect, all right? Because I'm going to wipe it off right now. Just take note of this, understand it, and take it easy when you're trading a ranging market. And remember, I told you it's only professionals that can just go about that, okay? I'm just making sure you guys understand everything. So once you can identify these, is best for you. So I'll be moving down to a choppy market. You know, I said the choppy market, we don't trade it, because the choppy market is like this. Sorry, the choppy market is like this. Choppy market is like this. If the choppy market is like this, moving like this, similar to the ranging market, but it doesn't have a support and resistance form at this point because it's not tradable. Why would you want to trade a market like this? This is the time that most of you are supposed to chill. But that's when you will see them, they want to trade a market like this. How are you going to trade a market like this when you see the market is choppy? It doesn't have no direction, doesn't have anywhere it's going. It's just moving sideways, and it's moving in a very, very, I don't even know what to say. Once you see a market going this way, just know you can't trade it. Where are you going? What are you supposed to do at that point? You relax, you go and chill. Go out with your family, man. Take your wife out, take your girl out. That's the best time for you to go and chill. But that's when you see a lot of people staying in front of their chart trying to get. And I already told you guys, the most profitable people in this market are not the people that stay on their computer every single day or every single minute. As long as you stay in front of your computer every single minute, you're not profitable. You're not a profitable trader. Quote me anywhere. That's what I will say. As long as you can stay in the market every single minute, you're not you're in front of your chart every single minute. You're not a profitable trader. So definitely you have to stay away from market like this. Stay away from market like this. So I hope I've been able to explain this structure, the component of the market structure for you guys. I hope I've been able to expand it, show you guys how to trade it. I hope I'll be able to express myself in a kind of way where you guys will understand that, yeah, this is how I'm going to trade this is how I'm not going to trade it. Because once you come into a market like this, you definitely have to understand. Once you open your chart, you definitely need to understand how to trade this particular market. You're definitely going to encounter an uptrend market. You're definitely going to encounter a downtrend market. You're definitely going to encounter a ranging market. So definitely you already know how to go about it. That is the main aim of me coming out today and talking to you guys. For the guy that sent me a message on my Instagram, in case you're just joining, or if you're just watching this, my Instagram is dasilva.eth, the one that is verified on the Instagram. Yeah, so that's it. In case you're just joining us for the first time, just take a little bit of time to understand this whole thing. Go again from the start so you understand the market structure, you identify the uptrend, the downtrend, and the ranging market. Because that's what I come out here to talk to you guys about today. I don't really have anything doing because I've been trying to cash out from the market. I got a lot of stuff going on recently, and Yeah, so sideways market, like I already showed you guys, the sideways market is the ranging market, and the ranging market is how I showed you guys how to trade it. But this is the choppy one. The choppy one doesn't have no resistance, no support. So what you're definitely going to do at this time, you definitely need to stay away from that market, because that is where a lot of traders move them lose their market money. When the choppy market is not going, is not having any direction, just know it's creating confusion in the market. Stay away from it. So now I'll be telling you why the market structure is important. The importance of the market structure, that's what we'll be talking right now, because you need to understand how important this market structure is for you guys. You know, the importance, the importance of the market structure. Market structure. Yeah. Importance of the market structure. It gives values. The importance of the market, it helps you to know the trend direction. Once you open your chart and you see the trend moving upwards, you already know it's an uptrend. That's the importance of this market structure. Once you see the trend is going down, you already know that's a downtrend. Once you see the trend moving sideways, you already know it's a ranging market. As long as you can identify these in the market, you don't have no problem. Trust me, you don't have no problem. It improves the entry and the exit for you. Once you see the market structure and you know already, I showed you guys how to trade it. It improves, let me write it right here, improves the entry and exit. The entry and exit is just simply the way to go into the market, when to enter and when to leave. It makes you understand when to leave and when to go in, especially when you're moving in a ranging market. Because you know, I already told you the ranging market comprises of 2 supports and 2 resistance, but that's meant for the professionals alone. So you definitely need to stay away from that market if you're not a professional. So it helps you trade with confidence. You trade with confidence. You like, yeah, this market is an uptrend. Yeah, so I'm buying. As long as you're buying from a retracement at the beginning of an impulsive move on a uptrend, you're definitely going to be rest assured that this market is definitely going to give you money. But most of the time, the market can just, you already know how the market works, because the market can just be tricky at times. But as long as you can identify the liquidity sweep, that is what I'm going to show you definitely in my previous video that will be dropping. I'll show you how I'll take you into the market and I'll break everything down for you guys. So yeah, instead of guessing, you are now reacting to how the market is showing you. Very, very important. You are not guessing when the market is going up. You're definitely taking from you're buying from the resistance. You're buying from the support, selling at the resistance when the market is an uptrend. You're not guessing at that point, because you already know what the market is doing. And the practical explanation, yeah, to practice and to know the beginning of an impulsive move. I already showed you guys that the market, you have to master the support and resistance and drawings. I already showed you that on my chart, and it showed, as you see, when the market makes a retracement move, you respect the previous swing support level. I already showed you that on my chart, how to show you how to respect the previous level. The upstairs and the downstairs I talked about, how to buy from the downstairs and take your profit at the upstairs. That's when you come about the support and the resistance in an uptrend, all right? So as long as you guys know that, and as long as you guys always know the common mistakes that traders make, that they try to ignore the trend. Imagine you seeing an uptrend which comprises of, let me put this here. Imagine you, let's say, okay, let me use a downtrend for instance. A lower high, a lower low, a lower high, a lower low, lower high, lower low, and lower high. Lower high, lower low, lower high, lower low, lower high, and lower low. Just imagine, and lower high right here. Just imagine you ignoring this trend and you're trying to buy from here. Just imagine you trying to buy from a downtrend. let's say you buy from here, you place your buy from here, it's definitely going to take you out. So always identify when the market is going down. If the market is going down, you stick to sell. If the market is going up, you stick to buy. That is when the buyers and the seller and the buyers are in control of the market. The market is coming down, know that the sellers are in control of the market. All right. And yeah, so trading in consolidation is when traders find it very, very difficult to trade. I won't want you to trade when the market is consolidating. If the market is consolidating, stay away from the market. Don't go into the market. The market consolidation is what I already showed you guys on ranging markets. You remember I already told you when the market is ranging is when the professionals are trading. So you have to stay away if you're not a professional. Take note of that. All right. When you enter without confirmation, remember I'm telling you guys the common mistakes traders make. If you enter without confirmation, just imagine you don't confirm that this is a low trend, a downtrend, and you went to start buying. That means you don't even confirm if it's a low trend. That means you don't have any confirmation. You need to have a confirmation before jumping into this market. You need to have a confirmation for you to know that, yeah, this is a retracement zone before you start selling also. So it works in both ways, either you're buying or you're selling or whatever, And common mistake people make is not waiting for the structure to break. When you don't wait for the structure to break, that is a very, very big mistake. You need to allow the structure forms before you move in a trade. You definitely need to understand all this in the market structure. I hope I've been able to tell you guys how to go around the market structure today. And I want you guys to understand that, yeah, this is the best thing to do when you're coming into the market structure. I've been able to show you guys everything you guys need to understand and you guys need to know. So whatever you guys are taking on or whatever you guys are going to do, always pay it in mind that the three components of the market structure is uptrend, downtrend, and ranging. We're not talking more about the choppy market because it doesn't seem so right, because a lot of people don't really know about it. So I'll be stopping right here. I'll be rounding it up right here. Like I already told you guys, if you're just watching us for the first time, click the subscribe button, click the like button, so whenever I'm coming up with a video like this, you will definitely be the first person to come around and watch this video, so you won't make any mistake, especially if you're my student. If you're my student, stay in touch, keep in touch, hit me on the gram, hit me up on the gram. Like I already said, my username is dasilva.eth, the verified one. Take note, and I want to say I love you guys. Stay blessed and peace out. All right? Catch you up later. Bye-bye. Bye.